So how is the multifamily real estate market here in Long Beach? If you're an investor, is this a good time to buy? If you're a seller, do you want to sell at the top? Maybe you should continue holding. Maybe you should refinance. What are your options? We're going to answer all these questions by looking at the metrics that most savvy investors care about. We're going to be discussing how the market did in 2021. We're going to be analyzing the catalysts and the factors that we need to be looking at to predict how 2022 might perform so that you as an investor could know whether you want to buy, sell, hold, or refinance. Now let's dive right into the numbers. So is Long Beach still a great place to invest? We're gonna be looking at some of the key metrics that would indicate so. Some of those are population growth, household median income growth, crime rates, how our property values doing, employment rates, rental values, up or down, vacancy rates, up or down, interest rates, and overall, how did COVID impact this? Now let's start with population growth. Now, I know the popular belief is that everyone is leaving California, that California is overpriced and you can't afford to live here. And that's quite not true. It's a narrative that we hear in the news, but that is not the case. We did have people leave and people did come in. And in Long Beach, very specifically, we had a slight increase in population. So if I'm a landlord, if I'm an investor, and I'm worried that where are my tenants gonna come from? Not to worry at all. We had a slight increase in population growth, very positive for the city of Long Beach. So let's talk about the unemployment rate specifically here in Long Beach. I mean, that's a real true measure on how our economy is doing is, do people have jobs? Are there jobs? Now, at the peak of COVID, okay, so maybe about a year ago, our unemployment rate in Long Beach was 14%. Right now, as of last month, we're down to 7%. So by half, a lot of the jobs have opened up. A lot of the restaurants have opened up. Our service sectors are back and opened, and there is a lot of jobs available, which is a very good thing if you're a landlord. It's a very good thing if you're a tenant to have employment opportunities here. So let's talk about vacancy rates. If you're a landlord, you pretty much aren't worried about having a vacancy because you know that if you own rental units, that as soon as your unit becomes available, there's kind of a long line of people ready to rent it. And we know from data that we've tracked on Zillow or any of the vacancies that we've had, if we put a property up on Zillow for rent, I mean, we have over 100 people lining up to rent it. So from our perspective, vacancy has never really been an issue, but we checked in with CoStar, and based on their records, vacancy factors in Long Beach are 3.1%, down by 1.8. So it makes sense that as population is growing, slightly growing in Long Beach, that vacancy rates would be dropping. So if you're an investor, you're looking to get started, very, very good numbers. Population growth is up, vacancy factors are down. If you're in the business of apartment owning, you know that there is strong demand for those rental units. Next, let's talk about rental values. One of the biggest questions we get from apartment owners is, are my rents too low? Where are rents at? So let's talk about that. In the city of Long Beach, we've tracked that there's been an increase of overall 6% citywide in rental values. Obviously, in some zip codes, they've experienced a little higher, in other zip codes, a little lower. But overall, if you're an owner, rents have gone up by 6%. Why does that matter? Because when rents go up, the value of your real estate goes up accordingly. So it's a very positive thing when you're in the business of owning apartment buildings. Let's talk about what average rents go for. Okay, in the city of Long Beach, the average studio rent's $1,590. Okay, our higher zip codes for that same studio, you're looking at $2,025. So that would be in the zip code of 90803. Okay, that is high, but that is the going rate. Let's talk about the one bedroom. On average, a one bedroom in the city of Long Beach goes for $1,850. So if you own in an area that you would consider average, or your property, you would just call it average overall, your one bedroom, the market rent could be $1,850. On the high end, again, now we're looking at the 90803, you're looking at $2,350 for a one bedroom. Significantly up in the last couple years. For a two bedroom on average, you're looking at $2,360. And again, a slight bump up for the better, more desirable neighborhoods, you're looking at $2,990. Okay, now let's talk about a three bedroom. What does a three bedroom go for? On average, $3,125. And on the higher zip codes, you're looking at close to $4,000 for a three bedroom. That's a popular question. Where are the rents? Where are they going? And sometimes it's hard to keep track. We have the data. If you need some more information specific to your zip code, please feel free to reach out. Now, one last thing with rental rates. Yes, we've seen an increase by 6%, which kind of correlates with what are we allowed to raise the rents, which was 5% plus CPI. which if you saw one of our most popular videos, we know that in this area, in this metropolitan area, LA, Los Angeles, and Anaheim, we were allowed to raise the rents by 6.8%. So the fact that overall citywide rents are up by 6%, direct correlation to what that is. Next, let's get into the fourplex market. Let's see how it did in the city of Long Beach. We had this massive increase in sales where in 2020, we had 82 sales. In 2021, we had 118 fourplexes trade. To this point, it's been the highest since we've been tracking this because on average in Long Beach, we know that there's about 100 fourplexes that sell every year. Now, that's an increase when we compare year over year by 43%. So people of fourplexes, they're trading. And again, as your market leader, we continue to track the information and we continue to sell for 10% more and 10 times faster. So moving on to the average price per fourplex. In 2020, we were just shy of 1.2 million. So in 2020, the average fourplex was going for 1.2 million. Now we are at 134. Okay, so significant increase of 12%. I'm not shocked. We've been seeing this type of double-digit increases since we've been tracking this for the last 5 years. And so not shocking. When does it stop? No one knows that yet, but clearly I'll give you some insight on what I expect is going to happen in 2022. Days on market, 2020 versus 2021 was stay the same 44 days. So if you have a fourplex, you're interested on selling, the average days on market is 44. Again, here at Sage Real Estate, because this is our specialty, this is our bread and butter, we are able to sell, again, much faster than the average, and we're able to generate offers that are significantly higher. Now let's talk about inventory. In 2020, on average throughout the year, there were about 38 fourplexes on the market. If you're an investor, you're a new buyer, you contact us, you want to buy a fourplex, there's 38 to choose from on average. That was in 2020. In 2021, we had a significant decrease by 37% where the options for a buyer at that time was 24. Since we've been tracking this, we've seen year over year decreases in the amount of inventory. Very good for a seller, right? Because if you're a seller, there's less competition. If you're a buyer, there's more competition, and the chances of securing the property you might want, there's just going to be a lot more investors out there targeting that. An important thing to note moving forward to 2022, as of today, and we're in the new year, there's 16 fourplexes on the market. Okay, so inventory for fourplexes is going to continue to drop, but like I said before, it's going to be low throughout the entire year, and that's going to play a significant role in price appreciation. The lower the inventory, the demand's still strong, prices are going to go up again. So for anyone out there who was thinking, there's going to be a waiver for closures, that's incorrect, or I'm going to wait till 2022 for this massive price reduction. That is not the case because there's nothing in our data indicating that prices are going to drop. On the opposite, they're actually going to increase again through the end of the year. Now moving on to the sales comps and analytics for units between 5 doors to 20. So this is if you own a 5plex or even if you own all the way up to 20 units. Let's look at those stats. In 2021, there were 208 transactions in the city of Long Beach, okay? So that's a really good number, a slight increase from the year before. And here's how that broke down. At this larger unit base, we always talk about cap rates. Cap rate is the rate of return if you were to buy the property cash. So the average cap rate in the city of Long Beach is 4.4. Granted, if you're near the more desirable areas, the higher rent areas, that cap rate's gonna drop. And naturally so, if you're in areas that are a little less desirable, the cap rate would go up. But overall, if you're looking at Long Beach for the larger commercial type units, cap rate 4.4%. Another very popular measure when we're looking at these size units is what's the average price per door, the average price per unit, okay? So in Long Beach, we're looking at $273,000 per door. Okay, so if you're looking at buying something, that kind of lets you know that in our average areas, you're gonna pay $273 a door. And obviously if you want something better, it's gonna be more than that. In terms of marketing for these types of properties, they sat on the market close to 4 months. And so if you own some units within this unit count, expect to be on the market about 4 months. Now, one thing that I know is that inventory was really, really low last year, and I would expect inventory to remain low throughout 2022. So here are my key takeaways that if you're an apartment owner and you're between 5 and 20 units, what we're gonna expect this year is strong investor demand. At the beginning of the year, I've been sitting down with a lot of investors. They're just as motivated as they were last year to find the right property, the right upleg. So there's a lot of investor demand. Now, the one thing that we know that we're gonna have a problem in 2022, less inventory than last year. So if you're an apartment owner and there's less inventory and you were thinking about selling, this might be the year where you get that price that we're gonna call your dream price. You never thought in 100 years that you could generate this price. And guess what? The demand is there and it's still a seller's market, and you might be in a better position now to maximize on that value than ever before. So given all this information, what are my thoughts? Okay, I get the opportunity to speak with a lot of investors where we go back and forth. What do we think is gonna happen this year? What can we expect? And even ourselves, I mean, we always tell you that we are investors first, real estate brokers second. In 2022, here are some of my concerns. Interest rates for last year pretty much remained the same. They were so attractive, and that's really what led to this big demand. Total units for sale, prices went up because of that. Now everyone knows that interest rates are gonna go up. The Fed is gonna raise the interest rates at least 3 different times, which is gonna impact interest rates. Now, from what we're being told, there's data out there and it depends on who you're following, but if on average interest rates were at 3%, we're expecting them to be 3.75 this summer. Again, no one has a crystal ball. We do expect them to rise, but I do expect them to still be under 4%, still very attractive. Now, does that mean that real estate values are gonna drop overall? Not quite. Does it mean that it's gonna slow down the movement of the sales? Possibly, but again, just to remind you, the investor demand is still strong, that momentum is still there. So although I expect a slight increase, I don't expect much movement in terms of price. So now, given that information that interest rates are gonna go up, what's my recommendations? What would be my advice? If you're an investor looking to buy, you're someone looking to get started, I would lock in that rate now. Why are we gonna wait till the summer for them to be higher? Because I've already told you rates are not gonna drop. So if you were waiting to buy something because values are gonna drop, don't wait. Lock in that low interest rate now. That is my recommendation to my clients and of course to all of our viewers that are out there. And if you're not in a position to purchase something now, but you're probably thinking more towards the end of the year, that's okay too. Interest rates will be higher, but then again, 3.75, 4%, nothing scary. Still terrific rates when we consider that those are very favorable and would still be considered all-time low. And a few other small items, not major metrics, but a few things that I want to talk about was redistricting. So in Long Beach, and I'm sure in other areas too, when there's population growth, they need to redistrict or redraw the lines for what district you're in. One of the main questions that I was getting from some of our clients was, oh my gosh, I was in a certain district. It was considered a desirable district. What happens now that I'm in a new district? All that happens is that you have a new council member, that's it. So in terms of property values, there's no change. You still live in the neighborhood that you live in, or your units are still in the neighborhood that they're supposed to be in. There's really no change of value. Part 2, our mayor is running for Congress. So Robert Garcia is going to be leaving his post as the mayor. And so now we're going to have an election for mayor. And the folks, Council Member Susie Price and Vice Mayor Rex Richardson, have already been 2 of the bigger names that have announced that will be running. It's going to be an interesting race. We're certainly supportive of them both. So based on all that data, is it still a good time to invest in Long Beach? Absolutely. Because we know that if you buy this year, we know a couple things. There's not enough housing, so the vacancy rate is super low. Rents are going to continue to go up, and we know that when rents go up, your value goes up. So although you might be thinking, oh no, I'm buying at the top of the market, doesn't matter. Rents are going to continue to go up. And when we look back 10 years from now, you're going to be glad that you made that purchase. So if you're an investor, you need to take that step forward, take the risk, purchase a building, because what you're buying is a business that there's simply not enough of. There's simply not enough housing, and nothing's gonna change that, and you're putting yourself in a position to win. If you're a seller and you've owned for 30 years, you've owned for 20 years, and you have massive equity that has continued to go up, this might be the time. I mean, how much better can it get? This might be the time to sell at the very top. We've been able to successfully help our clients move into out-of-state investments, a few triple net and a few Delaware statutory trust investments. We'd love to show you your options if you're in the predicament of what do I do next? We'd love to help. So there you have it. There is our 2021 year-end review and the 2022 projections of what we expect to be happening here in Long Beach. Thank you so much for tuning in. Thank you to all my subscribers. If you found this useful, make sure to share, like, and subscribe. That's all for now.